Good morning, traders. Welcome to the TMT stock market strategy video for Thursday, October 27th. All right, so we had Apple came out with their earnings. Was not good. They actually disappointed. We talked about this, and between Apple and crude oil selling off, that kind of gave the market an excuse to sell some stocks. So we ended up being down, but well off its lows. Dow Jones actually closed in the green because of Boeing, so they're a big component of the Dow. So they ended up holding up pretty well, pretty much most of the day. So what's going on here? Where do we go from here? A lot of questions to be asked. Markets are being held up, and it's just no two ways about it. I believe that if it wasn't the elections, we would be 200 points lower in the S&P minimum. And it just you just see there's a constant bid to the markets. Even when the markets do sell off at one point, they drive the markets back up well off their lows. And I mean they, meaning the government, whatever, the powers of be, just do not want a market to sell off until either just before the election or right after the election. It's just not going to happen. So unfortunately, the volatility that we were looking for October, again, was not there. We're talking 4 months of no volatility, range-bound trading. It's you can't get any worse than this, guys. This is really tough. When there's nothing going on, you have to be very, very selective in your trading, because if you lose money, it's very hard to make that money back. So 1 or 2 trades for the day. If you're lucky for 2 trades, that would be probably an ideal situation, especially when you're system trading, when you're using the algos. You take a good trade, you wait for the volatility rush, and capitalize on it. All right, so do we still have cracks in the walls? Do we still see some red flags? Absolutely, tons of them out there. I showed you the advanced decline with volume yesterday. Today I'm showing you the VIX. These are all part of our TMT trading model, still on a sell signal, and continues to do so with strength. So we have a little bit of what we call a strength meter, and as we get more and more of our model indicators that make the model up on board to the sell side, it just gets stronger as far as the sell signal is concerned. So you have the VIX here at 12. We bounced off this critical juncture here around 12 and a half. So you can see the Bollinger Bands here starting to pinch. So you just have to be careful here. And I mean more to the longer term, the swing trader, long-term investor. You have to be careful. You don't want to be looking to start adding to your portfolio at these levels. I do believe markets will come off in a big way, and you'll be able to add to your positions at a later date, much cheaper in price. You have a fully and fair valued market. There's no discount to buying stocks here, guys, so just keep that in mind. Crude oil, we talked about our commitment to trader reports, saying be careful. We had a build in the API number, which is the American Petroleum Institute. On Wednesday, we had a Department of Energy that says we had a draw. So go figure, guys. I mean, just the numbers are just continually being skewed and tweaked for a positive market. But obviously, the crude oil traders didn't want to hear it yesterday. I think they just kind of realized as much as I did. You get an independent agency, which is the American Petroleum Institute, comes out with a big build, and then the DOE comes out with a draw. To me, that's a little suspicious to me. Nonetheless, market sold off. Crude oil sold off. Broke 49 right here, but this is the key and pivotal area needs to hold. It's 49. We lose 49, we're going to rush down to the 50-day moving average at 47.30, and then if that does not hold, we'll probably flush down to the 50% retracement. And then there's where you want to start looking to maybe add to crude oil if you're looking to buy crude. I personally am not myself, especially when I want to see the commitment to trade reports. I want to see a lot of those shorts, the producers lighten up their shorts, thinking that we're going to probably move higher again. And again, it's not a timing tool, but it definitely helps to show you what sentiment is with the smart money and where they're looking to, what they're expecting crude oil to do in the future. So I'm looking for 38 or 50%. These are my 2 downside targets here. Let's continue to watch this. Next is going to be gold. I'm a big fan of gold. I love gold. I like gold on the long side, but we're only at the 38% retracement coming off the 2016 low here in January. And what does this look like to you? I mentioned it yesterday. I'll show it to the new guys. Just a nice bear flag here. Okay, really what it comes down to, it's just a big bear flag. I think we get one more drop down into this area here, anywhere from the 1200 to the 1220 area. and then we do some backing and filling, and then we take that out. That's where I'm going to look to start nibbling into in gold. Other than that, I would kind of stay away. If you're doing a day trade, that's one thing, but other than that, if you're looking to build a position here in gold, all it is riding the 200. Now, if you go into the weekly chart, which we don't have time, the 200 weekly moving average is right above it at 1275. So that's a significant area of resistance. So I would not be looking to buy anything here in gold at the moment. Let's take a look at GLD. You can see here lower lows and lower highs. So there's no momentum here to the upside that warrants to start nibbling into the long side. I want to see MACD, RSI. I want to see stochastic start to break above our downtrend line here. Okay, that's GLD. Go right into the index. You can see here we have a bear flag here. And this is, again, part of our Pro Trader Premier video. Just want to show you some of our big levels here on a daily chart. Of course, we dial it down to an intraday chart so you can day trade it. And just want to show you, see when I just took that off, pause the video to take that off here. You can see now without it how much more the charts really scream at you where these specific levels are. But you can see here, again, down to the RSI and MACD, we're pretty much low here. And we continue to move, making lower lows and lower highs. So again, nothing really big. Money is definitely coming out of the spiders. You look at the money flow index, and we're just sitting here on this big bearish rising wedge that we need to break. I like 2 closes below the trend line. That'll give me the trigger that we're looking to sell any rallies in the market. Right now, we just have a small bear flag here off of this pennant formation. First stop is going to be 210, guys, in spiders. Next is going to be the 60-minute. Again, showing you what we have here, and this here. I just want to kind of draw this trend line because you can definitely use these trend lines. They are active, and when you see MACD and stochastic starting to roll over here, that's your cue to be cautious here. Okay. Next, going to be the transports. Transports didn't do too much of anything yesterday other than to break down into a major support of 142. And it held. We had to get a little bit of a bounce, but our main leader is not leading. That's a very bad sign, a very bad omen for the bulls. Keep an eye on those transports. Now take a look at the IWM, okay? And again, here is the zone areas. Just wanted to show you guys, and something that that if you are interested, come take a look at the website. It's bar none. For very cheap cost, you're going to get an idea of where to trade these levels intraday. Okay, and come check out the room too. The trading room's fantastic. Come visit the trading room. Go to our website, sign up. IWM daily, right here. Look at this bear flag. We broke the bear flag, and now we hit our 120. Has to hold. Key and pivotal, guys. We lose 120, we're going to flush all the way back down to the 61.8% retracement here. Okay. Next is going to be the Qs, and last is going to be the Qs. And you can see here we had a doji. You know, Apple reported some really worse than expected numbers, and then again, it's the euphoria. I would stay away from Apple, and our trading model in Apple is to sell any rally spikes, and it's been working out pretty fantastic. A lot of you guys have been following it, been doing well with it. I think it's a mature growth stock. I think it needs some new innovation, some new products other than the Apple iPhone, and new and improved and enhanced. Who cares? There's tons of other phones out there. You know, yeah, they have $200 and something billion in cash. That's fantastic. But without any growth, why would you want to be in Apple? You know, if you're going to look to buy Apple, I'd be buying Apple way down below in the 90s if it gets down there. But right now, first downside target in Apple is going to be 110. All right, guys, have a great day. Be safe out there. We'll see you tomorrow.